Okay, hi everyone. It's July 8, 2021, and you're watching the Awesome 10X Global Market Update. It's a Thursday, so let's take a look at the markets. So last night, the market continued to bleed, and we have to see that the market is showing signs of resistances. What should you do? All right, let me take a look and show to you what I've been doing. So my portfolio actually reached a high of about $44,000. I redeemed $5,000. I had a start of 25K. I added 5K, so that was like 30,000. I was up about 50%, nearing 45K, and then I released my 5,000. And then 40,000 minus 45K minus 5K. So if I will add it, my actual amount is about 30K, and my equity, my value is about 34 plus 5, which is 39. What I've been doing for the past few days of volatility was, you've seen how people were actually shocked with the DD announcement, and then they were also shocked that DOYU didn't actually, the merger of Huya and DOYU was actually blocked again by Chinese regulatory concerns, which made it drop 20% a single day. So continuous sell-off in Chinese stocks made my Alibaba, Tencent, Pinduoduo falls precipitously. And you're seeing that because I'm 5x leverage, that's actually going to hit me. Example, if it's down 10% times 5, I'm going to be down 50%. Nonetheless, I don't really mind because Alibaba, if it goes down, I have actually that stop loss is not really true because I'll be cost averaging these names. I don't really have plans to take any losses on my Chinese stocks. It's not about being stubborn. It's about the fact that I know what I've bought, and these regulatory concerns, while they are valid, it's not going to be a reason for me to buy them today, but it's not also a reason for me to sell them today. So I would assume that your Alibaba would fall, let's say, 180 or 190. So anyone who bought around these levels should be aware that the downside could go as far as new lows. So new lows for Alibaba would hit about 195, 190, 180. So you are supposed to be prepared. And I'm actually prepared by actually making sure that I have some cash on the side. The fact that I actually exited $5,000 a couple of weeks ago tells you that I'm ready to deploy that money in case I have to. So when the market was very strong, what did I do? I took a profit, and then I took a lot of profits, and I took out actually some cash. Now that the markets are going down, I will actually, so there you can see that I've made $5,000 money out. So money in was 30,000, money out was 5,000. I could money in that 5K. I'll deploy it again in order to actually take advantage of the drops in the market. So you're also seeing that a lot of my buying positions over the last few days, this is July 5, June 29, this is closed July 8, July 7, July 2. Specifically last Friday, actually, July 2. Last Friday, I trimmed a lot of my winners. So you're noticing actually that even in my eToro account and even in my IBKR, last Friday was the day that I actually taught people how to sell calls. So most of my sell calls actually became very profitable in just the next 2 days. So to be honest, I was really thinking that the market was gonna fall, or else why would I take profits last Friday, July 2? Most of my positions were closed July 2, from Editas to Shake Shack to Spotify to Airbnb to Ubisoft to Disney. Some Pinduoduo I managed to exit, but not everything. So you'll notice that to $1,000 of Pinduoduo, I managed to make it just out break even because I was a little bit concerned with the general moves of China. I didn't know actually that the DD Global event would cause a huge strain. Um, I was noticing just weakness in the market on Thursday, Friday. I didn't know because the news on DD Global happened Monday. Neither did I know about the Huya merger DOYU not transpiring because that news happened Tuesday. So price action wise, there was a little bit of warning, although I didn't know what exactly was happening for the price action. I just thought that maybe the price action was falling because the market overall was stoppish, which I would agree upon. That's why I sold some Sun Power, I sold some Canadian Solar, I even sold some Palantir. Spotify sold, Netflix I sold. You'll notice that I was just in a selling spree. These are all closed on July 2. So I had a selling spree July 2 on over everything. I sold my JD at 77. I sold my Vuzi, my Baidu. So I had an inkling. The market seemed toppish. And that's why I was advising a lot of Awesome 10X members to sell calls. You'll notice that all of our sell calls, and this is just 2 days actually, for instance, ChargePoint, I made a sell call at 35, EHang, a sell call at 50, NEO, a sell call at 60, QuantumScape, a sell call at 34, Danimer, a sell call at $30, Affirm, sell call 75, Hopin, sell call 10, Teladoc, sell call 180, Agora, sell call 45, Invite, sell call 37.50, Pintuatua, sell call 140, you'll notice I did everywhere. Agora, Invite, Pintuatuo, Editas, Nano Dimension, Copin, Agora, Copin, yes, API, Agora, FUV, Kingsoft Cloud. So in general, actually, I was already in the cautious mode. Every time I sell calls, guys, I'm in the cautious mode. But I'll tell you what, even if I'm cautious, I definitely didn't sell all of my shares. And I was just managing my drawdowns. That's why it was my topic last Friday, managing drawdowns through Awesome 10X. So example, you woke up and last week there was a movement. I can't remember which exact day. I'm not sure if it was last week or was it this week. Ashford Hospitality made a reverse stock split. And that plan actually backfired to them. And they also had a placement of about 46 million shares to their existing shareholder, Mr. W.B. Riley. So the stock price actually fell 50%. Good thing actually July 2, way before the announcement, because I was seeing that the market was a little bit toppish, I was selling calls. I was selling calls, not knowing that my sell calls would be my mitigation of drawdown. So essentially, even if I had a 10% stake on HT and I only made a sell call of about 1% here, 1.5% sell call, that unrealized P&L of $9,900 is just one third of my exposure here. So technically, if I actually made a sell call of as much as 10%, pretty sure I would have even been up. Like this would have been $90,000 versus $30,000 loss. Then again, that would assume that I was so sure that AHT was gonna fall, which I wasn't. I didn't even know about the reverse split. My reason or my condition of selling AHT at 7.5 was thinking, well, AHT was not gonna go 50% higher, or if it will, I was willing to make it a covered call. So this was actually a covered call. And a covered call didn't necessarily need me to have an exact example. If I'm long 50% in the entire market, if I was willing to really hedge my drawdowns, I don't necessarily have to have a 50% position sell call. All I had to do was do something like 15% sell call to manage the drawdown. I wasn't really doing a bearish take. Of course, in hindsight, if you really think about it, what I should have done was to sell call and actually eliminate my stock, or even not necessarily eliminate my stock because it already gapped down. What I would have done is to actually short a significant sum of AHT. So I didn't short it. This was just a covered call, but it tells you that sell calls can only manage a drawdown up to some point. It cannot really escape a big miss. Actually, even if AHT only fell 10% or 20%, it would have still suffered an unrealized P&L. If you ask me, is Ashford going to go down to zero? Of course not. I think like Ashford, what's happening nowadays is that it will take time. So what you'll notice here is that it made a reset. So a lot of volumes. It reset here back to about $1.84. So I'd say that there's a lot of support on HT here at about 197 or $2. That's actually almost the same price as these levels of November 9, 2020, the moment when we got the Pfizer vaccine, the BioNTech, and Moderna. So I'm seeing that this is two things, still a reopening play, still oversold. Therefore, my goal and my plan is I'm actually going to cover my sell calls specifically by December. So that's December. Since I think that Ashford is not yet going to go higher, I will continue to hold my sell calls perhaps until November and take that premium. So far you're noticing that the premiums I've gotten was already 77% here. As time will decay, this will continue to fall until this becomes 90%, in which case that would be an unrealized P&L of about $12,500. Let's say $12,000. Now for this one, I will be getting something like just this one is small. This is like just $1,500. So it's like 53 contracts. So I'll just wait for this to go 70-80% as well, because by December, if it cannot reach 7.5 or 10, definitely these will expire to zero, and these prices will expire to zero. And therefore, I will collect my entire premium. Now, of course, I will also be able to find a way to buy my AHT back here at about $2. So I think in the short term, what I've noticed with every company that makes a gap down in this manner, you normally will have leeway to wait 2 to 3 months to see what the market's plans are. So for those who don't know what exactly happened with Ashford, a quick look is to just simply go to Ashford Rob Hayes. So this is the CEO and president of Ashford Hospitality Trust. So they're saying that they've got a lot of assets in the country portfolio. And July 6th, the market was not happy in the second quarter revenue par growth. But if you're gonna ask me, this is actually a very good number. RevPAR continues to move in the right direction. In 2020, June, 256% up already. In 2021, May, 414%. April, 624%. That means your second quarter 2021 growth is actually up 372% versus 2020 pandemic. Now, if you're going to compare these results versus the 2019 prior to pandemic, they're still down 46%, which is normal, guys. Because from a reopening standpoint, it's not as if everyone is actually out there and about in hotels. It's not as if everyone is really traveling all the way to about to get a staycation in a hotel. So I think that the market's bearishness on HT, while valid, isn't really as the negativity is already priced in at $2. So I'll read to you the news bits that happened. On July 3, this happened after the close. So it means that on July 2, when I was selling calls in AHT, I had no idea that they would do a reverse split. So July 3 was after the close. I was already a Saturday in the Philippine Time. AHT announced a 1 for 10 reverse split. I remember waking up Saturday morning. Wow, what exactly happened to my AHT? It was like down 40% on that single day. So he says that by doing so, we are attempting to address several concerns we hear from investors, including, so I'll read to you the reverse split. Some funds cannot hold stocks below $5. What this means is that they want the stocks to reflect a 10:1 split. This $2.38 will become $23. If it's $2, it's going to be $20. If I have 1,000 shares, they'll divide it by 10. So I'll get 100 shares at $20. It's actually the same. A reverse split doesn't change the number of shares that you have, but it makes some funds have a theoretical reason to assume that, well, HT is not a penny stock. So funds who wants to own a REIT can now buy it if it does a reverse split, which made the company want to do the reverse split. Also, some brokers are prohibiting or charging high cost to margin the $5 stocks. So $2.50 option strike increments on HT is far from ideal. So what he's saying is that right now, because HT, the call strikes are $2.50 increments, it's $2.50, it's $5, $7.50, it's $10. Even if you wanted to sell calls, it's just too limited because of the $2.50 brackets. And says here that most trading commissions are based on the number of shares or options, so a higher stock price can actually lower the percentage cost. We are hopeful that this reverse split, particularly on the heels of our recent addition to the various Russell indices, will help increase incremental demand for HT stock and options. For more information, have a great 4th of July weekend, everyone. So, some people are, of course, very angry. Says here, I'm going to read to you the commentary on HT. The stock is negative 60% since you started talking on TV, CNBC, Twitter. Also, you announced a reverse split dilution combo on a Friday after ours, and listed option strikes as one of the reasons for the split. You borrowed $350 million loan at a $600 million cost. You own 0 shares of AHT. This explains the put inflow at the close, said Unusual Whales. For those who want a breakdown of what the flow was showing on AHT, insiders were selling here. It doesn't look great. AHT announced a reverse split. It's down 26% in after hours and down another 8% today. Here's the flow day by day. On Wednesday, whales were 55% bearish. On Thursday, another whale was 56% bearish. On Friday, that was 58% bearish, and the dark pool says that 77% were bearish. Insiders were dumping. When you see the flow increasing bearish and the dark pool sales are running higher, the unusualwhales.com is going to tell you that this was fucking the retail investors very well prior to July 4th. Says here, some people are saying, you never even announce a good news after the close on Friday of a long holiday weekend. By definition, this is bad news. So what Rob Hayes does not realize, a reverse split can destroy a stock's reputation. Because of this, AHT's reputation is gone. The stock is now used as a pump and dump. Many retail investors holding the shares will sell and never come back to this stock. Very disappointing. So it says here, Chris Camillo is saying, I focus on social arb trade opportunities, not meme stocks. But to answer your questions, supposedly splits, reverse splits, have to be neutral events. They're neither bullish, they're neither bearish. So pretty much the market still doesn't like how Ashford is doing. Now, okay, so what I'm going to tell you here is that AHT, Ashford Hospitality Trust, used to be a fan favorite of Reddit Club. That's why it went from $2 to as high as $8 in just April, May, till about June. So as it's falling here back to $2, let's not put emotions here. The support is at $2. The resistance is very well seen here at $4. So with a 100% upside and the downside muted at about $2, my answer here is a lot of the sellers will cover and buy here at $2. And then they will actually trade it such that if it goes $4, they'll sell calls yet again. So whether the reverse split happens or not, because I think the reverse split is supposed to be happening July 30, it actually doesn't change the fact that 7.5 will become $75, $10 will become $100. So if you think that AHT will be down for good for the next 6 months, the best case scenario is to simply sell calls as high as you can. And so far, you can still sell the $7.50 and $10 calls with the December strike, just like we did. Here, we did it to actually mitigate your big loss in the stock price. So that's something that I would assume every rational Awesome 10X investor or member will do. So that's something that we continue to hold as a position. We continue to hold our sell calls. This is a short on HT. It is to sell it at 7.5 and 10 until December 17. And when it expires, we collect all the premiums. I could do again and again and again. Let's say I do it on November. I do it next year, 2022. I can do that forever if I wish, as long as AHT will remain below 7.5 and 10 for the next foreseeable years. So that's one way that I could actually mitigate the drawdown, in fact, make money with this gap down. Okay, let's give you another gap down that many shareholders of Awesome 10X got blindsided with. So, another gap down. So this gap down was totally unexpected July 6. It was normal for us to buy at 7, thinking that 7 was a support because that was already the triple area support in the last couple of weeks and also months. So you'll notice DOYU has never broken 7 and was not sure that it was going to go 6. So some people bought at 7, not knowing the next day that DOYU was going to open at $5.50 and continue as 4th. You're noticing this huge volume on the downside, and the reason is because China regulatory crackdown. So it was reported that DOYU and Huya merger was going to take place. However, and even as early as March and November, they were still talking about a merger agreement. However, just 2 days ago, the DOYU-Huya merger was stopped by China. So China is the critical reason why this company fell 20%. I'm going to read to you. Okay, so Tencent-driven DOYU and Huya merger is blocked by Chinese antitrust regulator. An antitrust regulator in China is reportedly seeking to block the merger between streaming sites DOYU and Huya, the number one and number two largest streaming sites for esports in China, as well as three sources familiar, which is being overseen by Tencent. Tencent failed to meet the State Administration of Market Regulation requirements, giving up exclusive rights. Tencent withdrew their application to merge DOYU and Huya for this antitrust review. The firm allegedly had to wait 180 days or 6 months just to refile the application, and plans for Tencent to merge the two companies emerged last year. The firm currently has a majority stake in Huya and a 38% stake in rival platform DOYU. Following this merger, Tencent was set to own a 67% stake in this newly formed company. Originally, it was supposed to close at the first half and would have granted them the 80% share of the streaming market in China. So it was a monopoly control that Chinese regulators didn't want. However, with the share price falling here at $5.50, I like to say that DOYU is still the number one and Huya is still the number two. So even if a merger does not take place, it doesn't take away the fact that they are still the market share leaders in China. So this confusion in many Chinese companies, while it's very confusing, I do agree that, let's say the company never merges, is the company DOYU still really gonna stay at $5.50? So what you have to understand here is that there might have been some people who bought DOYU and Huya here at $7 to $8, thinking that there was a merger that's gonna happen. So they're just disappointed. And sometimes when they're disappointed, they just sell en masse at any price. So this was a sell out of disgust and not on fundamentals. Whenever somebody capitulates and sells it on disgust and never thinks, what does DOYU have? What is their market share? I always say that that is actually not an opportunity to sell, but just a waiting game. So what did we do with our DOYU? With DOYU, we continued to sell some call options. Not sure if I posted it here. Did I post it? Here. Yeah, I did. So you're noticing here that I shorted DOYU 120 contracts at $7.50 and took at 84% premium. This is particularly huge, at 3.75% of my net asset of my portfolio. I would only do that if I'm confident that DOYU will not break 750 until August 20. So take note, you've got 1 month. Today is July 8. August 20 is a month from now. If you think that DOYU will not rise, the probability for it to go to 750 or a 40% rise after this huge bazooka news, if the probability is not gonna happen, you should sell as many DOYU sell calls as you can, right? And that was the rational thing to do. So I did that, and I shared this piece that I shorted some DOYU. Some people are saying, what if I don't have DOYU shares? Should I still also do and follow your recommendation to short sell calls of DOYU on August 20, 7.5, receiving 84 cents? When you do this, exactly what are you doing? Let's compute it. You're getting 120 times 84, so that's $9,600. I repeat, get a calculator. You cannot actually make a gap down with me and not expect me to not make any retaliation. So this is what happened. And this is what I teach people. This is the awesome 10x style of managing drawdowns. And I actually shared it in the Free Friday class. Selling calls is a way for you to be sure that you'll collect a premium while the market or the stock is in sideways. The underlying is DOYU. The strike price is 7.5. This is the number of contracts. Remember, 120, each contract is 100 shares. So with each contract of 84 cents, that means it's $84. I'm receiving 120 times 84 or $10,000 if DOYU remains below 7.5 until August 20. The answer is because the intrinsic value is 0 and the extrinsic value, which is time decay, will go down to 0 as long as it's below 7.5 and as long as it's August 20, 2021 today. So you could see I did that for DOYU and AHT. I'll tell you what I'm doing as well with Sundial. Sundial last night actually went up. So this is of course also a meme stock. So a meme stock usually has volatility, which means that anyone who buys the shares has to know how to handle that volatility. Sundial were bullish here at 75 cents and it went as high as 150. Normally, you'll see people take a loss, not necessarily loss, but take a profit, right? So they'll take profits here at 140, 130, or even here at 120 if their cost is about 75 cents. And then they'll buy somewhere here about 95 cents or $1 below. So you're seeing really that last night, Sundial had a quick dragonfly move, fell to about 84 cents, and then closed up to 94, 95 cents. Usually, you do know that there are still these bearish resistances at 1.1 for Sundial. So what should you do? From July till August, take a look at the Sundial calls. There's 1.5 strikes, and you can get as much as 14 cents limit order. So what does that mean? You can get a 14 centavo premium. So let's say you're selling 100 contracts. Just multiply that. 100 times 14 cents is $14. So you're going to get $1,400 simply by selling Sundial calls at 1.5. I think it's about October 15, 2021. So there's still that time decay here. As long as Sundial does not meet 114. As long as Sundial doesn't break 1.5, which is these levels. 1.5 is this all-time high area. So if you're thinking that the next few months is going to be just slightly here, consolidating here, you want to actually sell calls, collect premiums, even if it's a naked sell call. The key to making money in naked sell calls is find super high strikes. And this is something that I've seen. So I would agree that Sundial sell calls is giving a great opportunity to make a 14% yield and also make a really impossible strike price. So here, sell Sundial calls, 17-cent limit above. Also, I'm going to give you an idea. Look at the following names. These are our wearable places, right? Wearable companies. Now, if you're long these shares and you want to control the drawdowns, so far, even if we know that it's a bullish sign for Eman, Kopin, Vuzi, and the likes, you can take a look at the fact that the current highs of $5 is likely not to be met by the next month of August 2021. So if you think that it's not going to go all-time high next month, what should you do? Take a look at the $5 call price, the strike price of $5, sell call again on Eman. And even if the yield is just as little as 3% or 15 cents, if you sell 100 shares times 15 cents, that's still $1,500. It's still money that will expire to zero because of the unlikelihood for Eman to actually reach 5 by 1 month. I'll give you another idea. I made a money by selling calls on this space, Virgin Galactic, for next month. This August, why is the 70 sell call strike giving as much as $7? So I did that. I'll show to you the exact thing that I did for space. So yeah, sell call space, 70th strike, $3.70 limit, August 6, 2021. So next month, August 6, you can still get about 5% selling the 3.7 limit on Virgin Galactic. So 3.7, one contract gives you $370. 10 contracts gives you $3,700. So if you want to make money, you might have to take a look at these types of deals because these deals will not happen every now and then. If I didn't do my sell calls immediately on July 2, I won't get this huge gain ASAP. Neither would I get these gains ASAP. Look at these. $100 here, $200 here, $1,000 here. If these stocks would expire below the strike price on these dates, these are all going to go unrealized P&L of 100%. So take a look. Even if my net percent liquidation is very small, because I made very small option contracts selling, because these were covered calls, it will actually still help on the drawdowns. It will help especially when the market's going to be sideways for the next few days or weeks. So these are the things that we are doing. And I think that in a market trajectory like right now, wherein the market's slowing down, the best thing to do is to sell calls at the highest yields possible. What is it? Example, Editas. Editas, I was able to sell at $70 strike. If I could recall, Editas, what strike did I do? Here, 70 call for next month. So usually, guys, if you're very confident that I did that actually 2 days ago, so mostly July 2. So July 2 was actually the peak. This was 59. I was selling the 70 calls thinking that, well, first and foremost, I already have Editas. If I have it at 35, I'm willing to sell it at 100% higher, no problem, if it's gonna be covered. It's a covered call, actually. So with that unlikelihood for Editas at 45 to go 70 within a single month, the premiums actually fell a lot. Like time decay wise, it fell a lot. Time decay and intrinsic value fell back to zero. So yun, that's one way. That's what I'm doing recently. And I'm gonna share to you as well ideas that I have. Um, these days, you're seeing a lot of companies actually selling at super duper good prices. What are the good prices? I'd say 9984, for instance, SoftBank. So SoftBank was, of course, a casualty, a victim because of this DD Chuxing incident. Because SoftBank owns Alibaba, SoftBank owns DD Chuxing, and with that exact drop of these Chinese stocks, it's normal to see SoftBank fall a lot. Now, you could argue that this 7,000 yen could still go to about 6.8 or 6.4 or even 6,000, but I'd say any drops of these are interesting. I've also been doing the following. I love solar companies, and so you're noticing that from a solar perspective, Jinko Solar was strong, Sunrun was relatively strong but consolidating, had a profit taking last night. 968 still uptrend but some profit taking too. Sun Power still profit taking here at 28. Enphase, a lot of profit taking here at $190 last night. So you're seeing that after a strong run up, if you want to make a sell call, these could be twofold. You can do two things. If you believe that Enphase is not going to break above 240, what should you do? Take a look at the sell call on Enphase tonight at $240 and then see if you can get at least 5 to 10% yield for 1 month or 2 months expiry. That's one way. Even if it's a naked sell, I think that this drop is telling you that there might be some consolidation in the next couple of days. The same thing that we are doing with most of your electrics. Let's take a look. Let me show to you the exact sector. This sector went up strongly for good reasons, fundamentally secular trend. But sometimes after you make a 100% rise, it makes the case that a sell call option at a high strike makes more sense rather than to assume that it will continue going up another 100% like the Virgin Galactic space that we did. So I'm gonna share to you, for instance, electric, no? So you're noticing that it's normal. Neo, workhorse, I never liked it, so I don't really care about it. Neo, ChargePoint, Plug, Nano Dimension, RCMoto, XPEV, all of this will drop. Why? Because from a performance standpoint, they've been up quite significantly for the month and year to date, right? Notice that, up 100% and so forth. So with super strength of this sector, and if you actually check 5 years or 1 year ago, it's gonna be super strong. It's normal to assume that all of these strong names will get some selling pressure. So how will you actually make money if you think that there will be selling pressure? Other people, usually they can only think of, well, I'll just sell it and take profits and put it into cash. That's one way. For instance, Ganfeng Lithium at 130, 140, 150, expect some resistances. Expect that this is not going to go all-time highs. At the same time, if you don't want to do those things, you can just simply do what we did. Like for NEO, we were seeing sell calls at 60. So whatever was the high, that's your sell call. Last night, it already fell back to 46. What would I do with NEO? I think that any rallies of NEO, you'd already have sell calls. So every time NEO goes up, sell call 60, sell call 56. Because you'll always have that assurance that people will still profit take. At the same time, because we are very bullish on NEO, you can do the following thing. Let's say NEO falls tonight to $40. You could either buy the shares at 40, even if it can go to 36, or you can sell puts at 40. This is the inverse of sell calls. And we are also actively trying to buy shares that we like and collect premiums for it. So for NEO, I'd rather sell put because I'm more bullish on this rather than bearish. I'll sell puts at 40, but I'll sell calls at 60. So technically speaking, we are playing the twofold game. Even in Canadian Solar, what I've been doing here was I own the shares, I have a sell call at 50, I have a sell put at 40, and I collect premium twofold. So I'd say that right now, the markets are very choppy, and the best strategy for a choppy market, the awesome 10x way, is to sell calls at very high strikes, sell naked calls if you want to, but that's really how I'll do it. Okay, TPGY doesn't have volatility, so I don't think that you can sell calls as much. Razor, I like it, but also no volatility. So at $2 or $1.99, it's a buy, but you just have to keep it. Any specific news on Heidi Lau? I'm a bullish person on Heidi Lau. 41, I'm willing to buy. As low as 20, I'm still a buyer. I think like right now, most of your Chinese issues can still fall because the market is not aware of how much this regulatory crackdown from DD Global to Tencent to Alibaba is happening. The entire US is actually so afraid of what this Chinese regulatory black swan is that they're willing to sell some prized issues. For instance, you're seeing tonight 700 continuing to tank to 528. We've never seen it this low until 2021 or 2020 during this drop when Tencent was actually being discussed to have zero WeChat in USA. So every time there's a drop in Tencent, you have to be aware that we like it fundamentally, but we can never know how low this can fall. So for instance, with Tencent, how do you mitigate your downside? One way to mitigate your downside is to actually sell calls at about 630. So you can already initiate a 630 sell call for the next year, assuming that you have shares of Tencent. You will actually assume that the stock price will never rise beyond 637 for the next foreseeable year. So from now, July until July 2022, you would assume that because of this regulatory crackdown, that the shareholders of Tencent would have a bad year. So about 637 highs, you would sell call, take a premium, and do a sideways movement here for the next foreseeable 12 months. So I think like the proper thing to do for most Chinese shares is to sell call, collect premiums as high as you can, even if it's a 2%, 3% yield. Or in the case of the big caps, because there's not much yield, you just sell calls on the higher yield formats. So DOYU still good yield, about 11% yield. The meme stocks in general are giving good yields. So Sundial AHT, good yields. That's why I shorted them. Heidi Lau, I don't think you have good yields. Also, I've never really tried sell call options in Hong Kong. I haven't tried. So I did sell calls for US names. But for Heidi Lau, I'm just really holding on to this with the assumption that if the market will penalize all the Hong Kong stocks, this could fall as low as $27. So I have some at 41 and then I'll probably buy 27. So the key in investing, guys, as usual, is market position size. You'll notice that if I have a 3% position on it, I can buy as low as 3% position again, say $27, if it will ever fall. Now, I'm not really sure that the market will fall, no, but I think that US investors, particularly hedge funds there, hate the fact that you delayed the Ant Financial IPO, you delayed again and had these risks with the Huya DOYU merger. How much more? I think there's also rules that are from China that are delaying Chinese companies to list abroad. So it's so much regulatory concerns in the short term, I think everyone who has cash will not really buy Chinese stocks. They will buy Chinese stocks. It's normal for you to buy Chinese stocks if you didn't know this risk. Example, if you were buying Pintuatuo 2 weeks prior, because I was buying Pintuatuo 2 weeks prior, and I never knew that China will do this. So in a way, it's gonna be a casualty part for the Chinese stocks. That said, it never changes the fact that these Chinese stocks that we are buying are really good. So I don't really care if Alibaba falls to 190. I don't really care if Pintuoto falls below 100 or JD because I know fundamentally they are the top ones. Like they're the monopolies, the platform ecosystem winners. Nonetheless, of course, in the short term, I want to have my money work for me. So the only way for your money to work for you is to sell calls. Because selling calls in a choppy environment is the best way to collect as much premiums. Anyway, I told you that you can make $25,000 just selling calls, $50,000 selling calls. So while they're all sleeping, just sell calls. It's very easy. Selling calls is just like I think you just sell calls 6 months, 2 months, 12 months. That's the only way, I think. And then sell naked calls. Anyway, it's so easy. It's so easy to sell calls. You can just do it through IBKR. Sige, that's it. Bye-bye, guys.